Good evening and welcome to First Issues. Last week saw the Executive Committee of FNB lay bare the inner workings and performance of the bank for scrutiny by members of the media, members of the financial community, shareholders and their clients alike at the announcement of the 2014 year-end financial results. The bank has consistently managed to produce a profit even in the toughest of economic times, and this year was no different. And although overall GDP continues to improve, the CEO of FNB, describes an economic landscape that is riddled with challenges for the banking sector.
As some of you may be well aware, GDP in Botswana picked up over the last 12 months, registering 5.9% year-to-date March 2014. The drivers of that growth changed from what we have seen in the past, from non-mining to mining. Mining has boosted growth starting its recovery in 2013, mostly because of diamond production. The non-mining private sector is now on a downward trend since mid-2012, registering a 4.6% growth compared to mining, which registered a 14% growth year-to-date March. This annual sectoral growth detractors was mostly water and electricity, together with construction and agriculture. And as I said, mining being the one with the most positive growth. But we are seeing a fairly balanced economic growth across most sectors, all the way from trade to government and manufacturing. Inflation fell to below 6%, staying within the target range, Bank of Botswana target range of 3 to 6% for a total of 14 months now, and is at its lowest since 1972. Main drivers of this low inflation are international inflation, as well as weak domestic inflationary pressures. We think that inflation is going to stay within this target range, at least for the next 12 months until our next reporting period. We have seen aggressive cutting by Bank of Botswana, mostly following inflation that I've just been talking about, a total of 200 basis points in 2013. We saw those cuts in this financial year, some of them in the last financial year. We think that we are now at the bottom of the interest rate cycle, and that due to stable inflationary expectations, we will stay in this cycle. So as a result, we think that the next move is likely to be upwards rather than downwards. But we don't see that in the short term. Credit cycles have been very, very volatile. And as you can see from that graph, we are seeing now, however, overall credit growth declining since early 2012. And the slowing growth of credit is being led currently by the business sector. We are seeing household cooling off, but still at very high levels. We are seeing, as I said, a steady increase in household debt, but most of that is biased through to short-term borrowing. However, as a percentage of GDP, household debt is within acceptable levels of below 20%. In this environment, we are now beginning to experience growth in credit exceeding deposit growth, which is leading to high to loan deposit ratios in banks' balance sheets. This is going to definitely cause repricing of deposits, but I guess Bank of Botswana is happy that those days of excess liquidity have almost disappeared, and Bank of Botswana certificates are now less significant in banks' balance sheets.
Good evening and welcome back to First Issues as we look into the financial performance of FNB in the just ended financial year. This year, the bank managed a 3% increase in profit after tax. For a bank that has frequently produced double-digit figures in this regard in the past, what do they attribute this performance to? What will it take to produce such results again? To answer these questions, tonight we have the Chief Financial Officer of FNB, Boitumelo Mogopa.
FNB Botswana does not operate in a vacuum. It operates in the Botswana environment that has seen a couple of headwinds, a couple of challenges in the environment that we were also affected by. We've seen a tough economic environment. I know that even in the last year we spoke about the consumer who's under pressure. That's still the case currently. As you'll see, as you've seen in my slides, consumers are still a little bit overborrowed, as well as just struggling to save because of what has happened in the past. We are still in a very low interest rate environment. Now what that means is that it affected us in the previous financial year as well as this one. Now what that means is that we are not able to achieve the interest income that we used to achieve in the past. We've seen tight liquidity constraints. We spoke about that in detail in the numbers. We are still also on a moratorium on increasing bank charges. What this means is that in January 2014, the central bank basically said that banks should not increase fees for the next 2 years. So we are in that freeze. We haven't increased our bank charges this year. So that means that we are affected by that. Now we're also seeing competition toughening. You'll notice that now we are sitting at about 13 banks, commercial banks in the country. Now that means that they will come with new value propositions. They'll come with wanting to get a piece of the market share. So that means it will nibble on the existing banks. So I think 3% where we are, we think that it's a decent growth given the headwinds that we had to contend with.
Some of the variables or the challenges that you mentioned are temporary, but while others like competition are here to stay. What will it take for the bank to see profits that we're used to seeing from FNB, or will it return to the double digits?
I think the fact that competition is toughening, it may mean that if we don't navigate and stay nimble as we've been in the past, it may come as a challenge, because as competition comes in, it comes in with new ways of doing things, new approaches, and so customers might move and whatever. But I think what we know at FNB we are very good at is to stay an innovative bank. I think in this last financial year, we won an award to be as the most innovative bank in the country. We'd like to stay innovative. So what that will allow us to do is to stay ahead in terms of the launch of products, the launch of offerings for our customers. We also have in our bag, and I think you would have seen what the CEO shared in terms of the strategy going forward. We believe that customer centricity, where we do everything for the customer that is core to them, what they want, not what we want. We believe that that will give us an edge in terms of just staying profitable going forward. So we've got very clear strategy. I think while I take your point that it is toughening, we've got very clear strategies to see how we will navigate in the future.
In which ways did you respond to the tough environment that you spoke about? You did say that 3% was hard earned, but you did achieve it. How did this come about? What was your strategy in this just ended year?
We clearly had a game plan. One of the things that we did not do was overhaul strategies. We kept some of our strategies, we refined others and refocused others. So if you remember FNB, one of our key strategies is to grow our balance sheet. I think that still stayed. It still stayed. You will see later when I speak about the numbers that we grew our advances by 17% year on year. That's a very good growth given the environment that we are in. Now, how did we do that? We did that bearing in mind our credit risk appetite. What I mean by that is that before we get in, we will have determined beforehand where we would like to play. Now that gives us a proactive approach in how we do credit. So we don't just lend out, we basically ensure that we lend out in the areas or in the segments or in the products that we believe will be good quality. So that was maintained. So that's why you see we grew mainly in the RMB space. You know that RMB was launched in November 2013. So they delivered quite well in terms of the balance sheet. They grew by 11%. We also grew in the consumer segment space, 28% growth that we saw in the consumer segment. And that's actually coming out of the schemes that we've also focused on, even in the last financial year. So as I said, it's a strategy that we refined, but not necessarily overhauled. We also drove transactional volumes. I think in an environment where pricing is a challenge, you just need to drive volume. So we did that in terms of our balance sheet. We drove our asset growth in terms of just the volumes. We also drove our volumes in the e-solutions environment.
For years, FNB has been trying to move their clients to their electronic banking channels, coining terms such as bricks to clicks. And it appears their efforts are paying off as transaction volumes in these areas increases.
I mentioned earlier just how innovative we like to stay. So I think what you've seen, even in the past, even up to now, is the shift that we'd like to see from manual transactions and into the e-transactions. So you'll see the slide that I showed earlier to the analyst that we've also seen manual transactions flattening out and the e-transactions on an upward trend. So when I talk about the e, I'm talking about your ATMs, your online banking, your cell phone banking, and your point of sale transactions. Those transactions we believe are our future as FNB. And we sit with an opportunity right now because a lot of our clients are yet to optimize those channels and use them optimally. So I think that's what we see an opportunity, and we kept the strategy and only improved it. And the way we improve it also is to ensure that you kind of add on the things that you can continue to do on the cell phone banking platform. The other strategy that we deployed is we continue to launch new products and services. We like to stay innovative. I think that's the thing that I would like you to take away. We've got a new Rand ATMs, and I think they're placed very strategically. There's one at the airport. There's another one in the border in Tlokwe, and there's a couple of other in Gaborone. We've also launched slim lines. So slim lines are replacing your mini ATMs, so it's much better, it's nicer, it does a lot more functions than what the mini ATM has. And they're deployed across the country as we speak. We've also launched we call it an ADT. It's a super ATM. So it's a 24-hour bank, for lack of a better word. So customers can deposit into this machine and have real-time access to their funds immediately. So in other words, what we're saying is that the days of going to the branch are really, really numbered, because there's an ADT, there's a cell phone that you have, there's online banking that you can actually use as a customer for your convenience and also for our efficiencies, I guess, as the bank. So those are the strategies that we kept, we refocused them, and we refined them. And they allowed us to deliver what we have delivered.
FNB prides itself on maintaining a healthy cost-to-income ratio. How then do they justify the 15% increase in expenditure that they incurred this year to their shareholders?
Let me speak to the cost-income ratio before I answer the question. FNB has the lowest cost-income ratio in the market. Now, what that means is that we are still not shy to spend. Even in the environment that we've seen where the top line was under pressure, we're still not shy to spend, particularly on good costs, investments. So this financial year saw us investing in our staff. So we recruited in order for us to structure ourselves accordingly. I spoke about earlier the Rand ATMs, the slim lines, the ADTs. That's investment that affects this particular line. We've also seen in this financial year that we needed to repair and replace a lot of our point of sale machines because there were a couple of service issues around those machines. So we took a deliberate strategy to repair those machines and to replace them in order for us to get back into our natural market share of that particular business. We also saw it important that we continue to refurbish our branches. This financial year we haven't opened new branches necessarily, but we've refurbished a couple of branches because I think we also believe that we must improve our convenience to customers. We must improve the way we look and feel so that what the customer sees in Mau is what they see in First Place branch. So that refurbishment of our branches continued during the year. So 16% year on year. We are comfortable with that, particularly that we continue to also keep an eye on the cost-income ratio, which is, in terms of the market, the lowest in the market.
Welcome back to First Issues as we dissect the 2014 end-of-year results for First National Bank, Botswana. Despite the odds, FNB has been excelling in recent years. From the very beginning of their journey to excellence strategy introduced 5 years ago, the bank achieved the biggest balance sheet in the market in 2009, the biggest advances book in 2010, and by 2011 they were the most profitable bank in the country. How exactly did they manage to achieve this? The CEO of the company takes us down memory lane.
FNB Botswana has reached a milestone as at June 2014. It's been a great year. It's been a great journey that we started 5 years ago, and that was in June 2009. As I said, it started 5 years ago, and we started with a vision. But before we went straight into the vision, we looked at ourselves and asked ourselves, what is our reason for existence? And at the time, we said that we exist to invest in our staff and customers. Those were our people. We also exist to ensure that we are a good corporate citizen for our communities. We exist to make sure that we are going to leave a lasting legacy for our shareholders and achieve results that break away from the pack. And I must say that we did exactly that. We started first by crafting what we called the 4 stakeholders. We said to ourselves, who are the most important people that we want to achieve end results for? And of course, the first one was our employees. For our staff, we wanted to be the best employer. The second one was our customers. We wanted to be the best service provider for our customers. And of course, the third one was our board. We wanted the board to be comfortable that we are doing this business under good corporate governance. And we wanted our shareholders to see us as the best performing bank. We did that through what we called a triangular model, which has 3 sides: segments, product houses, and channels. The segment's responsibility was to ensure that they take care of the customer. And the product houses were our touch point for innovative products. And we sold those products through the channels. All sides of the triangle were measured to 100%. So whatever we sold to our segments were products that were sold through channels. We had some very, very strong strategies that centered around what we call balance sheet efficiencies. We focused a lot on advances growth. You can understand this was before the market even woke up to the fact that there was a lot of opportunities in advances growth. If you see that chart that I showed you on the loan to deposit ratio, in the past, those charts for the banking industry was at around between the mid-30s to end 40s, including us at FNB. At that time, our loan-to-deposit ratio was at about 45%. And as I said, we're not the only one there. We saw that as an opportunity, and we said we need to focus on advances growth. Most banks were at that time putting their deposits into BOPSIs. We diversified our credit book, made sure that we are well represented across all segments and across all areas of our society. We managed the loan-to-deposit book ratio, as I said, but also focusing on the margins to make sure that we properly price for the risk that we're taking on board. Because as you can imagine, before all of this, all the deposits that we were putting on BOPSIs were basically risk-free. Now we're taking a bit more risk. So margins were an important part of our focus area. And of course, we talked a lot about collections. We made sure that we set up proper collection structures to support this new risk-taking initiative that we're embarking in. Our brands of RMB and Westbank got more attention. As you know, we launched RMB last year with much fanfare, and we are already beginning to see a lot of results out of that launch. Westbank continued to stay a focus area because it is quite an important part of our business. But we also looked at the holistic picture and told ourselves that the number of customers that we have, we can still grow quite significantly, and you'll see some of the results when I show them to you. We looked at our customers and realized that a lot of our customers may actually only just have one of our products. We wanted to make sure that our product penetration is quite strong to this customer base that we have. We diversified into our non-interest income through increased products as well as innovation.
How did this riskier and multifaceted approach contribute to FNB's performance? How successful was this measure at the end of the 5-year journey?
Let me just show you some of the results of the strategy. Growth in customer numbers from the beginning of the strategy doubled to 413,000. Look at our transaction volumes trends. You can see that mobile, online, and ATM, as well as point-of-sale machines, had some strong growth rates. But of course, branch stayed very flat. That was part of our strategy. We talked about moving our customers away from branch, more into e-channels. And you can see that was achieved. As I said, our compounded annual growth rate for e-channel grew at about 19% over 3 years, and I'm sure if I went a little bit back, it's an even higher growth rate. But for branch, it was only 6%. If you look at our balance sheet, for most of our trends, we either tripled or doubled whatever it is that we started with at the beginning of the journey.
It looks like their bold choices made for a winning strategy, maintaining the bank's position as market leader.
Let's look at what our competitors look like against us. FNB in the last 3 years, in terms of market share, has maintained, as I said, the biggest balance sheet, ranging between 26 and 27%. But what is interesting about this picture is that if you look at that other in red, it's moving from 15 to 20%, showing you that there is increased competition. So, of course, when there's increased competition, the top 4 banks are the ones who are going to be losing in terms of losing to competition. But I'm proud to say that we have maintained our position at 27% even this year. And our profit after tax was the best as at the end of last year. In terms of market share, our profit was 41% of total market.
It is now time for the stock market review, courtesy of the Botswana Stock Exchange.
Good evening. Let's have a look at the capital markets from the previous week. The domestic companies index, the DCI, is up 0.43% from previous week, while the foreign companies index, the FCI, declined by 0.02% compared to previous week. The turnover level for the week is 19.4 million pula, an average daily turnover rate of 3.9 million pula, while the total shares that traded for the week was 4.7 million. The DCI is up 4.28% so far in 2014 compared to 12.95% at this point last year, while the foreign companies index, the FCI, is also up 0.1% so far this year compared to a decline of 1.38% at this point last year. Take a look at the trading activities. The turnover level so far in 2014 is 1.5 billion pula compared to 1.1 billion pula at this point last year, while the total number of shares that traded so far in 2014 is 398.7 million compared to 390.4 million at this point in the year 2013. That was the stock market roundup for the week. Thanks for watching and enjoy your evening.
You may be a shareholder, existing client, or even prospective client of FNB, wondering how the bank intends to continue to thrive in a time when interest rates are to remain low for the next few years, where there is a moratorium on any upward adjustment of bank charges and fees, where competition is getting increasingly tougher with new entrants into the market increasing choices for consumers, and all the other constraints that have been outlined by both our speakers this evening. From me, Namitso Sibina, the team behind First Issues, and our sponsors, First National Bank, we wish you a good night and pleasant viewing.